Hey everyone, Couch Investor back to another Lemonade video for you today. So in today's video, we're going to go over why Lemonade is actually up 75% since its earnings report. We're going to look at the short float interest. We're going to talk about that specific thread on Twitter that Lemonade has put out and why so many people were enraged or maybe didn't understand what the heck was going on. And we're just going to go over again two specific questions that got answered during the earnings call. One was my question, and then the other one was about the next generation of cars, so the autonomous cars, and whether or not Lemonade would partner up with other companies. So we're going to talk about all of that in this video. Before I do so, I just want to thank everyone that has been subscribing lately. If you haven't subscribed to this channel, maybe hit that subscribe button. And if you like these videos, maybe leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there. I would also like to thank the Motley for sponsoring this video. Now again, I know for Lemonade, this is a very specific topic. These are my views and my views only. I made this video, Motley is just sponsoring it because I know a lot of people got the recommendation from Motley when Lemonade was super high. But again, this is my video, my views. I've been covering Lemonade since its IPO. So that's that. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full Offers. Through the Motley Fool's Stock Advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so a quick look at the graph. As you can see, it's pretty clear, right? We've been super high when, well, the whole market was super high. Then we crashed all the way down to around $60. Earnings report, and suddenly huge rebound. It's up 75% today, really an accelerated growth. We're now over all the moving averages, but we're now at a, let's say, resistance point, close to a resistance point, which was here back in March, $110. Again, I don't really pay attention to these short-term movements, but it's worth noting that what's been happening lately is that a lot of companies, we're going to look at that in a bit, with high short float interest, well, got wrecked because of this whole AMC, GameStop, Wall Street bet markets. So maybe Lemonade is obviously not taking advantage of it, but the stock is going through that cycle as well. So again, I like the company, I like the stock. Whether or not I will buy right now, no, I don't think I will buy it after it's been up 75% in just a couple of weeks. It's probably going to take a turn for the bad when everything else settles down. AMC, BlackBerry, I don't know, GameStop and all of those things, Clover Health, etc. Probably Lemonade will follow that trend down again. I don't think we're going to see $60. Maybe we will, maybe we won't. I don't really care. I just look at how the company does during the earnings call, during earnings report, if the companies add new products, if we hear something interesting, etc. So right now, be vigilant with stocks like these. We're going to look at the short float right now. So as you can see right now, we're at 19.29%, which is lower than a couple of days ago. But if you look a bit back right here, if you look at just after probably their earnings, it was at 30%. So pretty high. And maybe that's why it's gone down now and the stock has gone up 75%. So again, look out for those stocks. Also, lots of SPACs have gone up extremely fast in the last couple of weeks. Also, companies like Arkimoto, for example, are up more than double since their lows last month. So look out for those things. Don't chase a stock. Wait for the market to calm down, especially in that segment. Again, a company like SoFi deserves to be up because it's an amazing company, reported amazing earnings, partnering up with great companies. Now I believe a ex-executive of Google becomes the CEO of Galileo. So great move on that. Again, if you want me to cover SoFi, let me know down in the comments below. By the way, SoFi is IPOE. Ticker symbol has changed right now. So for Lemonade, the same thing. Don't chase a stock. I know a lot of people have probably bought it at higher prices, 150, 180, I don't know. But again, buy because you like the company, you like what the company will be doing in the next couple of years. I believe in this company. I believe they're going to be way bigger in the next coming years. Obviously not tomorrow, not in 2 weeks, not in 3 weeks. It's going to take some time. This company is just 5 years old and insurance businesses are 100 years old. So give them some time, give them 5 to 10 years, and you're probably going to have a better return on your investment compared to short-term investors and short-term thinkers. Now let's go and look a bit at this Twitter thread here because, well, obviously they deleted their last tweet. So they say it right here. We deleted this awful thread which caused more confusion than anything else. They were talking about their AI and denying claims, etc. And suddenly everybody was spinning their words around, blah, blah, blah. So they're saying here, we do not use and we're not trying to build an AI that uses physical or personal features to deny claims. I don't even want to pronounce those words. Then they continue by saying, we never let AI auto-decline claims. Our systems don't evaluate claims based on background, gender, appearance, skin tone, disability, or any physical characteristics, nor do we evaluate any of these by proxy. You can read more right here if you want. I'll link it down in the comments below. Maybe the past post wasn't that well worded because when you talk about AI, machine learning, especially with claims and insurance, maybe people can twist it around and suddenly it becomes a huge scandal, let's say. And obviously on Twitter, you can retweet very fast without even reading the whole thing. And if somebody reads just the highlights or the headlines, a lot of things can get misunderstood. That's exactly what has happened here. A lot of people are hating on Lemonade for one reason or another. Just don't understand those types of people, not just Lemonade, but any other company. If you don't like it, fine, pass, move to the next one. Why keep on going over and over and over on the same thing? If you don't like it, just go away. Let other people invest their money in a company they do like. And lastly, 2 questions during the earnings call that got answered. The first one is from me. How is Lemonade planning on growing its customer base faster than its competitors? So I just covered this specific part. It says, so long as our unit economics continue to be healthy and strong, we'll continue to lean into growth investment. That's what happened in Q1. And the yield is accelerating growth in in-force premium, in net customer adds. Also, we continue to launch new products. We've been reporting accelerated growth in our premium per customer as well. So it's not just strong growth that has been happening, it's actually accelerated growth. That's obviously great to hear because last quarter, for example, 2 quarters ago, let's say if you take out the latest one, a lot of people were worried that they're not adding any new customers or as many new customers as there were before. This quarter, obviously, they added close to 100,000 new customers, which is great. Accelerated growth, like they said, they are focusing on segments that are probably going to make them more money right now because that's what they need, more money so that they keep investing in their business and so on and so forth. Now, the second question was about would Lemonade consider partnerships with EV or autonomous driving companies in the future? What would it look like? Would it share data with them? So to summarize all of this, basically the answer is yes. At the end of this statement, he says all that technology is packed into the driver's pocket when he talks about a mobile phone right now. And we plan to leverage that power from day one without waiting for connected cars to become mainstream. Why does he say that? Well, because cars already today have lots of sensors, are collecting lots of data. You don't have to wait for EVs or connected cars to become mainstream for Lemonade to start rolling out their products because it's probably going to take a while until, well, the full market has transformed into EV and connected cars. But cars today already are collecting so much data. Your phone is collecting data. The system in the car, when you connect it to your phone, is collecting enough data for Lemonade to become successful and to roll out their product. And that's exactly what's going to happen. Probably at the end of this year. I don't see car insurance rolling out before that. So to conclude, the price is up 75% right now. Probably Wall Street Bets, Reddit, etc. are pushing this stock maybe a bit too high, too fast. So be vigilant on that side. To conclude, pretty happy. Let me know down in the comments below what you've been doing with your Lemonade shares, or if you never had one, maybe you plan on buying. Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.